This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. Last but not least, what does this all mean? Big picture for a macro backdrop. Money goes home is starting to come into the picture. So this hit my radar, and this is what kind of prompted it. So I added on to this piece, which is why I got a little bit long. But Japan's big opportunity to bring money back home. What's that? You know how much money they have invested in dollars, in petrodollars, in treasuries? They're our largest partner. They're our, sadly, vassal state as it relates to cooperation in keeping the yen weak and as a currency to leverage lots and lots of yield chasing in the US market, alpha by buying the NASDAQ, etc. So this is something that could change slowly, then all at once, where the rate differentials start to close. And all of a sudden, we've got a situation where, we weren't really watching for this. And then everyone's going to be watching for this. But money goes home, yen edition. So there's also Gulf Arab nations that are under attack right now. I wrote about this back at the beginning of the Iran war, how this will be very important to their capex cycle. And they're going to have to repair lots of infrastructure. Maybe that money stays there and doesn't come back into U.S. tech investments like it has been. Anyway, these are all things to keep on the radar. Even Besant, by the way, even Besant is threatening. This is Besant. This is him. He wants to keep illicit, well, of course, sorry, but it's true. Money laundering and illicit funding has been in play. Have you seen the thousands and thousands of Cayman Island shell companies? So he wants to dismantle, or he's talking about it, the financialization of U.S. markets. I doubt it, but if he does, this is another situation where he's trying to get, or this would force money home for sure. There is a great article that I actually layered on top of this tweet, by the way. He's very bearish, but he's a forensic accountant I have followed for many, many years. And he talks about the shell companies in great detail that needs AI to summarize because his reports are ridiculously long. But he's basically saying China controls them. And this is the wild card that the market doesn't see. So don't piss off China. Anyway, the point is money goes home is not front and center. We're looking at earnings season. We're looking at FOMC. But I'm saying big picture, keep it on your radar. I think it will be a little bit important toward the end of the year and beginning of next year. And this is the bull case if, big picture, the Iran war is successful for Trump, not for Iran, then the market will be pricing in that capture of oil revenue. Otherwise, we have a prolonged war in the Middle East that can absolutely trigger oil crisis that triggers the money goes home. Japan, Gulf, Arab countries, and the U.S. policy that I just showed you with Besant. So that would basically be something that we talk about later, but U.S. dollar recycling would very likely end if money goes home, Japan edition. I think that one is probably front and center, and why I'm watching the dollar yen so intently. And then another macro risk, rising yields. They're kryptonite to AI bulls. I talk about that. That would also cause money to go home even faster. But the Dundee valuation would lose its core support. But I will contend still, as I have been kind of pushing this theme, that high price and high risk, there are a lot of warnings about this topping pattern that could be a very significant distributive top, not the least of which is Iran war, not priced in, oil shock, all that jazz. But more to the point, we've got a lot of themes that are revisiting from last year that I wrote about early. And that was actually when Trump came into power, the Trump tariff terrors, and then this drama with Iran this year. Money goes home revisited. It has not gone home because they're chasing the AI rally. There is still petrodollar dependency. There is still U.S. treasuries of size holdings. But I'm getting signals here that that is absolutely in the works to start reversing, not the least of which is Japan. And we'll talk about that because I think Japan is actually a bigger risk that's starting to grow. And we have this little situation here where even the Nikkei, right, which you know is kind of a mouthpiece for Japan, they're profiling 5 U.S. tech giants with their hidden debts soars to 1.65 trillion on opaque AI funding. So why are they calling this out? Why all of a sudden Japan, who by the way benefits greatly from our AI ecosystem, is now kind of like putting a magnifying glass on what's going on with the big data center leases, GPU supply contracts that all raise the liability flag at Meta, Oracle, etc. So what's kind of interesting about this, at least in my mind, is that we still have the bull bear argument that's going on underneath the surface of whether this is a bullish opportunity with semis and data centers and memory coming on down, or if it's bearish. But one thing that I notice is this is very much a kind of a reminder that the government wants investment in Japan. So this could also be a lead for telling their powers that be, if you will, big money in Japan that has come here. Again, rate differentials, all the things that we've talked about, financed in yen to buy dollars to invest in NASDAQ, is a big, huge trade that looks very much like it's coming under the microscope. And we can see policies in Japan that are shifting very much for that money to stay in Japan. Money stays home. Money goes home, money stays home. But I think that kind of backdrop is worth tracking, long story short. And this is just one example where I think that this headline here where the Nikkei is investigating Alpha, Microsoft, Amazon, you can read it, get access, Meta, Oracle, they all are basically 1.65 trillion in debt that does not appear on the balance sheets, which is more than 1.35 trillion they officially report. So we all know that the off-balance sheets are opaque. And what is fascinating, though, is that the Nikkei is writing about it. I mean, think about that. It isn't the fact, and I know you can't get access to this, but the point is, I'm telling you, this is something where the subtleness, the nuance of this being highlighted, not by the US market or media, not at all, discounted completely, but the fact that we do have this off-balance sheet debt and liability that is specifically focused on hyperscalers and Oracle should raise a little bit of a flag. The BIS the Bank of International Settlements has already raised this shadow borrowing. Ding, 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 right? But they're always early, and that's not a timing tool. So anyway, I know folks are very, very focused on the quarterly earnings, and that's all very fine and dandy. And we've had 9 consecutive quarterly earnings, especially in tech, that have beat, and it looks unstoppable. But the footnote of this whole point is that there is still a lot of opaque liability that is not on the books that at some point will become an issue, especially in private credit and in the bond market. Number one trigger that I wrote about, literally on June 1st, I said, I see dispersion unwind coming, and we had it. June 2nd, it actually, remember my client post, dispersion unwind? Yep, remember that? And reverse yen carry trade, where the dollar yen, that's the second trigger. The dollar yen picks up and yen falls, dollar is bid. So right now, the dollar yen is pushing into a 162.8. That is the prior all-time high. What happens to a stock in blue skies? It has no resistance. So they're going to have to come in and do some yen intervention of size, right? That's what the yen shorts right now are worried about. And yet, what are they going to do about it? They are absolutely in an inflationary backdrop with, by the way, expanding loan growth. Jeffrey has written about. They need higher rates. They're going to come right over here. 10-year Japanese yield is only 2.7 right now. It's absolutely destined for greatness, whatever you want to say. But this is the next trigger that I had put on my bingo card back in June. And in June, we've gone sideways. June, July. We're almost 3/4 of the way through July and sticking the landing, so to speak, of sideways, chop into the summer drop. We haven't had the summer drop yet, really. I mean, we would have to get below 72. So we started with dispersion unwind. We're moving to the reverse yen carry trade, and now we're looking at liquidity potential flowing out, not in, if in fact Warsh tightens and does his obligatory one and done rate hike that the market is not pricing in, would absolutely cause some disturbance in the force. That's all I'm trying to say. But this matters, and that's all I'm going to say about that. 162.8. You get this and stay above, your yen continues to fall. That is bullish, the dollar, and it is bullish. Yields and rising dollar and yields together are bearish equities. And then you add oil on top of that, and we're hitting 85. If we gap above that 85, there will be gnashing of teeth.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.